Okay, all right. So we'll start the session. Good evening, everyone. My name is Vikas Agrawal, and I'm the founder and CEO of AIF and PMS Experts India. So at AIF and PMS Experts India, we keep organizing these knowledge-based sessions. I'm sure some of you might be attending it for quite some time. So our basically the agenda or the objective is to reach out to as many people as we can and educate them more about alternate investment funds and portfolio management services. And unfortunately, particularly in India, if you look at this industry is highly scattered. So we thought of building up the digital platform. So this is our attempt to build an online digital platform where clients like you can come in, share your experience, learn from learnings and wisdom of high quality portfolio managers. So the whole idea of building up this platform is to kind of one, educate and empower the investors community as a whole, and B is in case anybody wish to invest in a particular strategy, we help them from right from advising to the end of the curve in terms of helping them to execute the transaction as well. So today we have Mr. Nishit Shah. We've invited him from Phillip Capital. They are into portfolio management services, and Nishit heads the team, PMS team. So he's the head of equities as well as fund manager at Nishit at Phillip Capital. And Nishit brings about almost 2 decades of experience. So particularly, he's been investing for over 15 years now in Indian equity markets. He's triple graduate. He's done specialization in finance. He's worked with some of the large organizations like Motilal Oswal as well. And he's on both the sides. So he's on the buy side. He have had an experience of buying investments, and he's also on the other side of selling the stocks he was backed up by good quality research. So he had an exposure of dealing with institutional client as well in his previous organization. Sure. So we thought of inviting him. So today we have another 30 minutes to go. So today we'll dwell upon, his way of investing. How does he select the stocks? We'll try and understand more from him where the markets are headed. I'm sure all of you are curious to know the outlook of equity markets. So we would request Nishit to share the house view as well. But sure. Before that, the agenda, the topic of today is to talk about Sharia portfolio. So I got a lot of requests from some of the clients, and they wanted to know more about Sharia PMS and how does the compliance play, works out, and how do you screen the stocks, etc. So we thought Nishit would be the right person to invite, and he would be the right person to answer all these questions. So firstly, let me welcome you officially on the show of Ask the Expert, Nishit.
Sure. Thanks, Vikas. Yeah, I'm looking forward. And of course, you guys have been doing a great job. I've been following your journey since now almost 2 years since you have launched AIF and PMS. Yeah, it's a great job that you have been doing. Yeah, and educating and empowering the investors. That's very essential in today's world. So congratulations for that, Vikas.
Thank you, Nishit. It would have not been possible without the kind support from fund managers like you. So basically, the format of the show is very simple, Nishit. Let me just take a minute quickly to explain, and then we'll move forward. So basically, the Ask the Expert show, as the name suggests, we invite domain experts like you, and we try and read your mind. We try and know what's happening around the economy. How does the investor take the advantage and be cautious if at all he has to be cautious about market valuations. And at the same time, we try and read your framework as well. So that becomes a very, very essential part. And I believe that I'm overwhelmed with the kind of support and encouragement that we are getting from investors all around the world. So we've got more than 6,500 investors who are now there on the platform and accessing our website called www.aifpms.com.
Oh, that's a great number.
Yeah. I take this opportunity to thank all of them through this platform. So firstly, thank you so much for accepting a request, Nishit, and agreeing to come on the show.
Certainly. Sure. Yeah. Thanks a lot, Vikas.
Yeah.
Okay, so Vikas, how do you want me to you want me to make a presentation, or you want it to be in a Q&A session kind of a thing?
Yeah, so what we'll do is I have 2 or 3 questions, and thereafter then we can run the slides and
perfect. Yeah. That would be great.
So can you throw some more lights on what is this Sharia portfolio and how does it work, Nishit?
Okay. Yeah. So see, the entire idea of a Phillip Ethical India portfolio came in because we have an office in Dubai as well. Okay. And yeah, there's a very large Muslim community based out there who wanted to invest into Indian equity markets but did not have the wherewithal. Yeah. So there was always this latent demand. Yeah. So latent demand is what, that people want something, but there's no product or service available for that. Yeah. So the entire idea about the Sharia compliant portfolio was born out of that. Okay. So basically, what does a Sharia compliant portfolio say? Okay. See, all of us know, okay, that according to Sharia rules, you can't invest into alcohol, you can't invest into tobacco, but it is a very large, it is a kind of a completely different subject in itself, kind of thing. Okay. So what we try to do out here under this portfolio is we try to invest into stocks which are Sharia compliant. So what we tell clients, yeah, of course, again, a Sharia compliant portfolio would again entail many things, Vikas. Okay. So it is not only that investing into stocks. Okay. There's a concept called as purging. There's many other concepts. Okay. But we are not getting into all those things. Yeah. So what at least we are assuring our clients is that we would be investing into stocks which are Sharia compliant. Yeah. And how we do it? Yeah, see, again, I am no expert on Muslim laws. So what we have done out here is we have tied up with world-renowned Sharia scholars, yeah, who are expert on their domain knowledge. So they provide us a universe of Sharia compliant stocks. And then based on our stock picking abilities, we select the right kind of stocks from there. Okay. So it is like marrying of perfect. Yeah. So they get in the domain expert of Sharia scholars. Okay. And then based on our fund management capability, we pick up the right stocks from there on.
Yeah. So you are saying that you basically get the universe, which is well identified and researched by them, but research done is at your level. Is that what you're trying?
Of course. Yeah. That is what we do. But see, because just to give you an example, okay, Maruti is not a Sharia compliant stock. Why? Because for Maruti, the interest earned is about 3% of the total income. Okay. So what does the Sharia law also say is that any interest income is haram income. Okay. And that if it is above a certain level, then it does not fall into the Sharia perspective. Okay. So that is why Maruti is not a Sharia compliant stock. Okay. Now Ultratech is also not a Sharia compliant stock. Yeah. Again, you would be surprised why. Okay. Ultratech is not a Sharia compliant stock because it's paying a lot of interest on its debt. Yeah. Though the business is Sharia compliant, the cement business that or auto business that Maruti is there, that is Sharia compliant. Yeah. But
Yes.
okay. I guess because we lost you in between.
Okay. Yeah. So you were mentioning about that this interest income particularly, according to the Sharia compliance, they are saying that beyond a percentage, which I was not aware. This is for the first time I'm getting to know. Good that you told me. So beyond certain percentage, it is considered to be a haram income sort of thing. Is that?
Yeah.
Okay. So you get a list, and then basis that you pick up and do your own filtration and then invest on it.
Yeah, sure.
So
of course, in my slides, I will also talk about what is that filtration process.
So my last question, and then we can run the presentation.
Sure.
So do you customize the portfolio basis the requirement of the clients for Sharia, or it is a model portfolio that you follow?
Okay. Yeah. So that is again something very unique only to Phillip Capital PMS. Be it our Ethical India portfolio or be it our Signature India portfolio, what we try to do, we try to customize portfolio for each of our clients. Okay. So it is not only pertaining to Ethical India portfolio, yeah, but it runs across all ours. And that is also something which I'll cover in my slides. And of course, if there's a large ticket size client, then maybe we can do a lot much customization as well.
Sure. So we can run the presentation where if you can take us through your investment philosophy, that would be a great.
Sure. Yeah. Okay, so these are the points that we'll talk about, and of course, the first point I'll try to quickly run it through you because I know you guys are more interested in our investment philosophy, about learning about ethical India portfolio, and then finally, of course, about the markets. Yeah, so we'll try to spend more time on it. Of course, we would be more than happy to take question and answers at the end, kind of a thing. So just to give you a background about Phillip Capital, yeah. So sometimes I'm also surprised that not many people know us much here in India, but that way we are a 40-year-old company. Yeah, we are spread across 15 countries globally, right from US to Australia. We headquartered out of Singapore. Yeah, that is, and then that region we are like huge. Yeah, we are either number one, number two, or number three. Yeah, we are there in Singapore, Malaysia, Thailand, Cambodia. We are a bank. Thailand, we are an insurance company. Hong Kong, China. Yeah, and we are, of course, we have got presence in Europe. So we are there across 15 countries. Here in India also, actually, we have been there for now for almost 20-25 years plus, but we are more on the institutional side of the business and HNI side of the business. Yeah, and that is why, since we are not much on the retail side of the business, unlike most of my competitors. That is why maybe most of our guys would not have heard about us. But here also in India, we are quite well known. You name any large institution, FI, hedge fund, all domestic fund houses, right from the mutual funds, insurance company, all other PMS providers, AIF, all of them would be our clients. The second set of clients, of course, we do business out here is HNI. Again, in HNI, right from the largest of the HNI clients to many discrete HNI clients like you guys, they would be our clients. So here in India also, of course, we are very large. We have a very large research team of around 25 member plus research. Yeah. Globally, we manage $45 billion under asset and custody. Yeah. So because that's the number. Yeah. $45 billion under asset and custody.
Yeah,
And of
great.
course, our shareholder fund is in also excess of $1.5 billion. So this is a PMS team. Yeah. So Vineet and Raj, of course, they are a well-known name. Yeah. Vineet Bhatnagar has been heading Phillip Capital since now almost 25 years since its inception out here in India. Rajendra Bhammani, yeah, he's also just joined MD. He's been there since the start. Yeah, so see why the senior management is also part of the investment committee. See, today the minimum ticket size that we are talking about in PMS is 50 lakhs. Average ticket size is 1 crore, 2 crores. Yeah. So it's a serious business. When you're managing someone else's money, yeah, you have to show that seriousness. And that is why our senior management is also quite there kind of thing. Today we are not talking about sums of 500,000 rupees, 5,000 lottery ka ticket liya, laga to laga, nahi to nahi laga. This is hard-earned money of the investors, and that is why a lot of thought process goes into all our strategies, how we pick our stocks, and in our investment philosophy. Why? Yeah. So why Phillip Capital PMS? Yeah. So this is one question we keep getting. Yeah. Why we should not invest with one of the larger PMS provider, or why not invest with one of the more popular fund managers? Yeah. So what we had decided when we launched a PMS almost now 5.5-6 years back, that we'll always be a boutique service provider when it comes to PMS. Yeah. So of course we work under the larger umbrella of Phillip Capital. Yeah. So we are not a small fund manager who has quit his job on the mutual fund side or something and he has started his PMS. Yeah, or maybe someone else. Yeah. So there's a lot of cost attached to it. So that way we are attached to a very large global brand, but at the same time we run more of a boutique kind of a service provider. Yeah, so we can be very kind of nimble. Yeah, and that is what the thought process is. We are not here behind AUM growth and all those things. Yeah, what we want to provide is we want to provide consistent returns to the clients, and we want to grow along with the clients. Yeah, so that is the first thing that comes. Okay, the second thing is access to global research. Yeah, as I was telling you guys, yeah, that we are present across 15 countries globally. Yeah, so here in India, of course, we have close to around 20 plus research analysts. Globally, of course, I've got more of my colleagues. Now, how do they help me? Yeah, just to give you an example. Yeah, 2-3 years back, a lot of specialty chemical companies were getting shut down in China. Yeah, because of the pollution reason and all those things. So my analysts could travel to China to understand what kind of companies are getting shut down, who will benefit. Yeah, and that is how what. Yeah, otherwise, so any name with a chemical company here in India was flying off. Okay, but when you do this deep dive kind of a research, that is the time you come to know. Yeah, and the third thing is differentiated products. Yeah, so what we get to the clients is all differentiated products. Okay, so in total, yeah, we have got 6 products. Okay, so the first 2 products are standard products which most of our competition would be also having it. The first one is Phillip Signature India portfolio, which is a multi-cap portfolio. Yeah. The second one is Phillip Emerging India portfolio, which is a mid and small cap portfolio. Yeah. So these are standard portfolios, but if you look at our returns, we would be up there or maybe much better than most of our competition is. The rest four products are completely different. The first one, of course, out of that, the differentiated product is Ethical India portfolio, which is a Sharia compliant portfolio. Then we run a portfolio, fund of fund kind of a portfolio, wherein instead of investing into stocks, we invest into mutual funds. Then we have got a multi-asset portfolio. Then also we have got a completely customized portfolio. So what we have got the entire basket, yeah, bouquet of products. So it is not that a client आया चलो इसको ये product चिपकाते हैं. What is the need of the client is what we want to give it to the client. So that is what differentiates us. Okay. Yeah. This is another thing. Yeah. So Vikas, maybe you also pointed out. So we don't follow model portfolio concept. A client who has come in 2 years back and a client who's entering today, the portfolios would be completely different. Yeah, of course, there would be few stocks wherein we are more confident about which we would like to have, or maybe once we realign the portfolios, that time the portfolios might look similar. But what we do, a client comes in today, yeah, we look at the market conditions, we will look at the valuation, we look at the valuation of the stocks that we want to buy, yeah, and then we create a portfolio kind of thing. It is not that a client के लिए 2 साल पहले ये buy किया model portfolio, so let's buy the same thing for. No, we don't do that. The second thing is, and which is a little bit debatable, is we make staggered investments. We don't invest everything on day one itself. Okay, so that is again something very unique. Yeah? Some people might say, "Oh, you are trying to time the markets by sitting on cash." No, we are not trying to time the markets. No one can time the markets, especially we at Phillip Capital can't time the market. But the thought process is, what is the rush to invest everything on day one itself? Yeah. See, of course, I've worked with large PMS providers. I know that out there it is everything is about scalability. Model portfolio hai, client aaya, pehla din sab invest kar diya, and then you forget the clients. Okay. Here we don't do that. Yeah. We'll take our time to build the portfolio. Yeah. We'll take our time to construct the portfolio. Yeah. So that is work. The third thing is strict discipline. Yeah. So though we have a long-term investment philosophy, we do a lot of research. Yeah. But if we feel if we have gone wrong, we'll immediately sell off the stocks. Yeah? So strict disciplines in place. The fourth pillar, that how we are different from everyone, is there's a constant hand holding from the fund management team as well. Yeah. So there's of course the relationship manager attached to every client, but I as a fund manager would have spoken to all my clients once before they were entered. And after that also once in 2 or 3 months, we will be in constant touch with the clients. So what we, again, the thought process out here is that maybe we are good at fund management, but this market is also about client expectation management. Yeah. And because that is where you guys also play a very important role. When markets are high, clients want to invest more. When markets are low, they want to redeem. Yeah. So that is why we also come in. We also come in constant touch with the partners and clients. Yeah. So now let's come to our investment philosophy. So to put our investment philosophy into 2 simple sentences is, hold on to your winners for longest possible period of time, sell your losers immediately. Of course, we do. There's a clear no-go areas. We don't invest into PSUs, no cyclical businesses, yeah, no airlines, no hotels, no bad managements, no high debt companies. And again, this is our investment philosophy. I know that right now there's a very big debate going in the market about GARP and BAP, yeah. And what we feel that there are 1,000 ways to make money in this market, yeah. And each one of them would have a different strategy. I'm not here to say, oh, their strategy is good or bad. What we are looking at investing into good quality stocks at reasonable valuation. Again, I know that when you're looking at good quality stocks, you have to pay a high valuation, and we are fine with that. Yeah. So if you need to put us in the basket, yeah, then maybe we are more quality oriented as well. Yeah, kind of. Yeah, we follow a strict PE kind of an investment approach. Invest for us, management quality plays a very important role. Earnings and growth visibility is the second thing, and then comes the valuation. Valuation wise, as I was telling you, we are little bit kind of agnostic. Of course, it's important, but since we know that we are very stringent on the first 2 parameters, valuation wise, we need to pay a little bit higher. Yeah, so that's why. Yeah. The second thing is, of course, you have invested. Now what? Yeah, you also need to keep nurturing them. Yeah, what was good yesterday, is it still good today? So suppose we had invested in GMM Pfaudler at 700 rupees. Yeah, we are fortunate that we sold off around more than 50 to 60% of our quantity at around 5,000 to 6,000 plus. Okay. So of course we made a lot of money. Yeah. But what you also need to, why we sold off? Yeah. Because we thought that somehow we have made a lot of money. There are few things that we are not happy about. Yeah. So let's sell off kind of thing. Yeah. So you also need to constantly monitor. And then of course it's divest. Yeah. When to sell, when not to sell kind of a thing. Yeah. So of course there are few stocks we have been holding on for the last more than 6 years, 7 years as well.
Okay.
Yeah. So why long-term approach? Yeah. So this two slides, I like them a lot, kind of thing. I guess one of the slides is missing, but let me tell you. Okay. Let's take an example of HDFC Bank. Last 10 years, the stock has fallen more than 20% 5 times. Yeah, guys, 5 times it has corrected more than 20%. In fact, when HDFC Bank falls down by 20%, other stocks generally fall down by more than 20%, 30, 40, 50%. In fact, in 2008, the stock had fallen down by 56%. But despite that, and I'm repeating it, despite that, if you had just held on to HDFC Bank for last 10 years, you would have made 600% returns. Yeah. But now, why not only long term approach? That is more important, guys. Yeah. So let's take an example of Punj Lloyd. Yeah. It was supposed to be the next big L&T. Of course, it had a big rally of 400, 500%. But today that stock is down 97%. So that is why you need to constantly keep monitoring your portfolio. It's very important. Yeah. Guys, right now, of course, markets have been doing well. In fact, bad stocks have been doing much better than the good stocks. But it is constantly you need to identify. Yeah. Of course, if you have got into a bad stock, made your money, but please sell off. Yeah. And how do you monitor that? Quarterly numbers, results, yeah, news flows, whatever is there. And there were enough signs. I'm not saying that Reliance Communication, we sold off at 800 rupees. Yeah. But there were enough signs at 500 rupees, 400 rupees, 100 rupees. Yeah. But today, that 100 rupees would have been much better than what 1 or 2 rupees that it is right now. Okay. So now let's talk about our Phillip Ethical India portfolio. Yeah. So the objective is very clear that we want to invest into Sharia compliant portfolio. It's going to be a multi-cap portfolio wherein we invest into large cap, mid cap, small cap, around 20 carefully chosen names. Yeah, that is what where we invest. Again, I know there is a very big debate in the market that what is the concentrated portfolio, why one should invest into a concentrated portfolio, and there's a different debate that it should be very broad based. Yeah, we feel that 20 stocks, around 18 to 22 stocks is a well diversified portfolio. Yeah, and that is what we would be investing to, around 18 to 22 names in our portfolio. Of course, we started this portfolio in December 2017, almost at the peak of the mid cap, small cap bull cycle of the last cycle. Yeah. And since then, we have been constantly been doing well in this portfolio. Yeah. Of course, many of the names have helped us, like GMM Fodlers, Honeywell Automations of the world, kind of thing. Despite not having banking, this portfolio has done quite well for us. So the methodology is quite simple. As I told you, we have tied up with world-renowned Sharia scholars who give us a universe of Sharia compliant stocks. But for them, how do they screen? Yeah, so for them, the first thing that comes is business and industry screening parameters. Okay, so if a stock is under BFSI, if it is stock is under alcohol, tobacco, it immediately goes off. Yeah, if a stock is into it's related to do anything with pork or something, of course that stock goes up. The second thing that comes into picture is financial screening. As I was telling you, why Maruti or Ultratech is not a Sharia compliant portfolio, because they and we, both of us, screen the balance sheet and P&L for interest incomes and all those things. Yeah. And then comes purging of impure interest income. Yeah. So that is the third parameters that one looks at. Okay. Now, this is the investment process that we look at. Yeah. Of course, there are 5,000 listed stocks. Sharia scholars provide us a list of around close to around 1,000 Sharia compliant stocks. Again, you guys would be surprised. There are more than 1,000 Sharia compliant stocks in India. Yeah. Then we shortlist around 50 based on our proprietary filters, based on our universe, and then we select invest into around 18 to 20 stocks. Yeah. So what if you see, yeah, guys, the portfolio construct works at multiple levels. Yeah. So it is not only at one level, but it works at multiple levels, kind of a thing. Yeah. So it is not only okay, so stock, yeah, and kind of thing research. Okay. Then this is, of course, how we do our research. Okay, there's quantitative screening, there's research, and then there is portfolio stage. Yeah. So now so many people say, I am not a Muslim. Why should I invest into a Sharia compliant stock? Okay. So this is again very important. Yeah. And here and I have not taken data of my portfolio. Of course, my portfolios would have done better. Here and say, suppose there's Nifty 500 index and there's Nifty 500 Sharia index. Now look at the return since 2013. Sharia index on a consistent basis has outperformed Nifty 500. Yeah. So that is why it is there. So it is not only, of course, the main objective of this portfolio is maybe Muslim clients who want to invest into equity but want to do it in the right kind of a way. Yeah, then this. Yeah, but this is also meant for guys who's looking for pure returns. Yeah, because index itself has done better than your normal index. Even if you look at the Nifty 50 and Nifty 50 Sharia index, again the Sharia index has done much better. Yeah, so because guys who have been attending it, yeah, so many, and that is why sometimes of course Muslim communities themselves, they are not very open about investments into equity markets, and the other people who think are Sharia compliant hai, so it is for Muslims, so they don't, so we don't get much audience. Yeah, but it's a very good product. Yeah, just by investing into normal index, you're making much better than your Nifty 50 or Nifty 500 as well. Yeah, so that is the crucial part that I wanted to highlight. Yeah, and of course, as I told you, there's a latent demand, but yeah, but maybe somewhere down the line we'll find the right audience. Yeah, the audiences might, the Muslim audience also might catch up to a big kind of investment. Of course, there are a couple of ethical Sharia compliant mutual fund schemes as well, but which have not been doing that well. So that is why we launched our portfolio, and we feel there is a big demand and it can do well. Yeah, we might feel that a portfolio acha nahi karega, we might not be able to garner a lot of AUM, but this is where I feel a lot of, and in India, not only in Middle East, yeah, there's so much of demand out, maybe in Andhra Pradesh, yeah, Kerala, West Bengal side. There's a lot of, and those guys have the money. They don't invest into FDs as well. Yeah, again, because for them interest income is haram income. Yeah, so their money sits idle. So in fact, Sharia laws in fact says that equity is the best investment option. Yeah. So I would strongly push to this video, of course, who have been attending, once it is on YouTube, guys, please do invest. This is the best way, that rather than making your money sit idle, this is a good way to invest. Yeah, so yeah, so this is the way maybe you can get started. Yeah, and of course, if there are any queries, you can get in touch with us. There's always Vikas, you can get in touch with you. So I try to keep the presentation swift and short, so we can have some time. Maybe Vikas, you can take up some questions, and I would be more than happy. And then, of course, we can go on to the markets as well. Yeah, I guess that is also very important.
Yeah, certainly. So if in case you have any question, audience, please feel free to type in the question in Q&A box. In the meantime, so if you can turn off this presentation, Nishit, yeah. Yeah, all right, okay. So the first thing that I wanted to know, so this is a kind of multi-cap, is it, the Sharia portfolio?
Yeah, it's a multi-cap portfolio.
Okay.
So we invest around close to around 50 to 60% is in large cap, and another 40 to 50% is into mid and small cap.
So why is it called ethical fund? So any logic behind it?
So see, as per the regulation, what we understand, you can't call it a Sharia compliant portfolio. Yeah. So that is why if you go on the mutual fund space as well, both the funds are called as ethical. Yeah, they are called as ethical portfolio. Yeah, see, of course, the objective is it is Sharia compliant portfolio. Yeah, but I guess we can't name it as Sharia, and that is why we have given it as an ethical portfolio.
Yeah. So when they are creating a universe, Nishit, I'm sure some of the stocks would go out every year, some of the stocks would come in. So how do you keep a track on that? And can you give some example where you had to, even if you like the stock, you might have to sell the stock?
Sure. Yeah. So see what happens. One, of course, as you rightly said, there are stocks which come in and go out maybe on a regular basis. But before selecting any stock, we see that for last 12 quarters, the stock should be consistently a Sharia compliant stock. Okay, so that is one very important parameter for us. Okay. Then the second thing is there are few clients. Yeah, so it also depends upon clients. And as I told you, one of the main points of USP of us is we are in constant touch with the clients as well. Okay, so some clients are little bit liberal. Yeah, so suppose something like a Maruti. Okay, we had invested into that stock in 2017, and that stock went out. It was no longer a Sharia compliant stock in 2018. Okay, now it was because its interest income had gone up to 3.5 to 4%. Okay, which was above the hurdle of 3%. Okay, so then, of course, we get in touch base with the clients. Yeah, that this is the reason that it has got out of the Sharia list. Okay, so of course, few clients have told us, yeah, that you blindly follow the Sharia scholars. Whatever they say, Sharia is not Sharia. You sell and buy. Okay, so there's those set of clients. Yeah, and there are clients who say, if it is because of minor reasons here or there, then we are fine with it. Okay, but say suppose if Maruti today, tomorrow got into a alcohol business, then of course it's a big sell for them. Okay, so but you would again be surprised, since we follow this stringent process of selecting stocks which are on a consistent basis for last 12 quarters, they are Sharia compliant. We have hardly seen any churn because of this parameters. Over last 4 years since we have been running this portfolio, we have seen only 3 or 4 incidents of stocks moving out of our portfolio.
Okay, okay. So you're saying that you go back and speak to client and understand.
Say suppose, as I told you, 80% of the clients have told us, Nishit, please follow the Sharia scholars. Okay, 20% of the clients, they are all given us two kind of a mandate. Either one, of course, if they go into a taboo, yeah, business, then of course it's a sell for them. Yeah, but it is a minor tweak here or there. 3% interest income ke jagah pe 3.5, 4% ho gaya, then they are fine.
That brings me to my second question. So what kind of investors? I mean, this ethical fund is suitable for what kind of investors? Only the one who is looking at Sharia compliance, or for a wealth creation?
Yeah. So see, one, of course, the main objective is that maybe it is one for investor who's looking for a Sharia compliant portfolio. Yeah, because that is the main purpose of this portfolio. But as we have seen from the returns, yeah, the slides that wherein I showed you, yeah, so that way, in fact, we have one investor, yeah. Then we have 6 strategies. वो क्या बोल रहा है निश्चित किसमें भी डालो जिसमें पैसा सबसे ज्यादा बन रहा है. Okay, so this is actually for everyone, yeah, who is looking for wealth creation. Yeah, this is for everyone. Yeah, and in fact, one of the investors also pointed out, yeah, because in this portfolio we don't invest into Sharia banking and finance stocks. Okay, वो बोलता है निश्चित मेरा बाकी सब portfolio में इतने सब banking है. I've invested into mutual funds. I've invested into a couple of other PMSs. Around 30 to 40% is in banking and finance. Okay, so in fact I like this strategy because you guys don't invest into banking and finance. Yeah, and of course returns are better. Yeah, it is not only that you're compromising on one particular sector, but returns are also much better, kind of a thing.
Yeah, understood. So which are the sector which comes under Sharia compliance, and which are the sector which doesn't come?
Yeah. So see, actually, as such, all the sectors, yeah, except for banking and finance, that taboo. Yeah, sectors like tobacco, defense, alcohol, pork. Okay, these are the things that, I think leather also, because in some cases the leather is made out of the skin of the pork. Okay, the pig. Yeah, so this particular companies or this particular sectors, they don't come into Sharia compliant kind of a strategy. Yeah. Otherwise, everything else is open kind of a thing. Yeah, we can invest into consumption stocks, pharma stocks, IT. IT is one of the major concerns as far as the index is also concerned. Yeah, almost close to around 30 to 40% of the index weight is because of IT.
So, do you see this trend emerging now that a lot of Indian Muslim clients are looking out for the Sharia compliance portfolio?
Yeah. See, as I told you, Vikas, they are a little bit wary about investing into stock markets. Yeah, historically they have not been very big investors, not only in India but globally. But that trend is changing now. Yeah, as I told you, they can't invest into fixed deposits. Yeah, because that is an interest-bearing instrument. Yeah, so most of the time, what they invest into is business. Yeah, or maybe the funds are lying idle. And as I was telling you, in fact, according to Sharia concept, yeah, equity, and that is what business is also about. Yeah, equity investments are the best investments. In fact, they promote. Yeah, and that is where we see a trend changing. Yeah, in India as well, as second generation, third generation guys are coming in. Yeah, and the other thing that is also helping us, ESG. Yeah, a client who's looking for an ESG based investment approach, this also suits them, kind of a thing. Yeah. So yeah, so to answer your question, yeah, it is picking up, but of course we still haven't even scratched the surface, kind of a thing. Yeah.
Correct, correct. So since you have your office in Dubai as well, so
Yeah.
how has been the traction out there?
Yeah, so there also, of course, we do get a lot of inquiries, but the other thing also that we have seen, what happens is, the wealthier a client, lesser compliant is he is with his religion. Yeah, and it is not only with respect to one religion, even with any other religion. Yeah, so wealthier the guy is, the lesser compliant he is with his religion. This is what. So maybe one, he might be interested in Sharia. Yeah, and then he'll say, I'm fine with any other strategy as far as I'm making money. Yeah, because what happens? Yeah, after a point of time, yeah, it becomes quite difficult for a wealthy guy who has investments across many geographies and many other investment assets, kind of thing, to monitor it. Yeah, but of course we have been seeing quite a good traction. Yeah, in the Middle East, and especially here in India also, in the southern region of India, we have been seeing quite a big traction.
All right, so we'll open up the forum for Q&A. So the first question is, what's your market, how's view on markets?
Sure. Okay, great question. So yeah, so what, of course, market has been very kind to all of us since last 1.5 years. After the big fall that we saw in March 2020, we have seen almost 1.5 times rise in the markets. So what our call is from here on is, we are very, very confident that markets would do well over next 2 to 3 years, and a lot of wealth would be created in this next 3 years. Yeah, but at the same time, we'll not get this one-way movement that we have seen in last 1.5 years. We'll find many ups and downs, volatility would rise. Yeah, and that is where now it is more important, more prudent to stick with a good investment advisor or a good fund manager. Because over last 1.5 years, if you had picked up any stock, yeah, actually you did not need a fund manager in last 1.5 years. Yeah, in April, May, if you had picked up any stock, that has done. In fact, you would have done much better than most of the fund managers, professional fund managers. Yeah, let me accept that. Yeah, but this is where now I feel markets will get selective from here on. Yeah, it would be much more earnings driven, more of portfolio quality driven, kind of thing, and that is where a lot of wealth would be created. Yeah, so if I feel that we are in a similar kind of a market which we had seen from 2003 to 2008, yeah, the big phase that we had seen. If you go to back to that phase as well, because in 2003 to 2008, market had seen almost 4 times correction of more than 20%. In fact, in 2006, we had seen a big meltdown of around close to 30-35%, and mid caps were kind of had broken down important levels as well. So I see that kind of a volatility coming to the markets. Yeah, because right now what has happened, money making has also become very simple. Yeah, most of the guys, yeah, see, I come from a Gujarati business community family. Yeah, all the guys, they keep on talking again about the markets. Yeah, most of them have left aside their business. Yeah, and so I feel that little bit of joke is required as well. Yeah, and it would be healthy. In fact, it would be much healthy for the markets. But yeah, if you're into good stocks, you'll make a lot of money. Yeah, I feel we are in middle of the somewhere in that cycle. If you ask me that, okay, 2003 to 2008, we are in maybe 2005 or something, and a lot of wealth would be created in next 3 years.
Certainly. So interesting question. Second question is, what currency do you accept for this Sharia fund?
So see, of course, this is an INR based product. Yeah, it is based in India. The PMS is based in India. So, but we can open NRI client accounts. Yeah, or maybe we can get funds of FPI clients. We open FPI clients account as well. And yeah, that is where we can accept any. So your money, maybe suppose it might be in USD or dirhams or anything, but once it comes into India, it will get converted into INR.
Yeah. Next question is, what type of accounts client can open? So let me just clarify here. It's basically a PMS where you are giving the power of attorney to the portfolio manager to invest on your behalf. So there we'll have to kind of set up the demat account, where the stocks are held on, going to be held on your name, and we'll set up the saving account, and then that's where the dividend will start coming in. That's how. Is that correct, Nishit?
Yeah. So for domestic clients, we open up a demat account. For NRI clients, we open up a NRI bank account, a demat account, and a trading account.
So next question is, what are the interest charges for? How are interest charges incurred?
See, of course, there is no interest charge out here. There is a fee, of course. Yeah. So of course, for fees, they can get in touch with you. Yeah, for to know the exact fee structure. But there's no interest charge. Yeah. So of course, what happens, as I was telling you at the start, there's something called as interest purging. Okay. Now, say suppose when the client is giving us the money. Okay. The money is lying in the bank account for some time, so it is making some kind of an interest. Yeah. Or maybe when we are investing into companies, yeah, those companies might be making some interest income less than 3%. Okay. So all this, what if it's a very strict Muslim? Okay. What he'll do, he'll have to calculate what is, suppose if he gave us 1 crore, then out of this entire thing, the interest income was close to around 5,000, 5,500 rupees. So he'll have to go and donate that. Okay. So we don't do that. Yeah. So that interest purging, we don't do that. If that is the question, I don't know. So what we are trying to do here is we are investing into Sharia compliant stocks. Okay. So that is where we are stopping. Otherwise, it's a never ending process kind of.
Yeah, and those interest are incurred by accrued by those companies, and they are just investing in the stock. So the appreciation of the stock is nothing but your gross profits.
Yeah, it's a capital gain for you.
Yeah. Another question is, what are the growth plans of Phillip Capitals in India?
Oh, okay. So of course, we are quite gung-ho about India. We have an office in India since many years. Yeah, and like many, we would also like to grow. But as I was telling you, the entire thought process of Phillip Capital India is that we want to be a high touch. Yeah. Well, even if it is a broking business or it's a PMS business or a wealth management, we always want to be the high touch. Yeah. So we are not much. That's why we are not into scale. So what our thought process is, we want to do business with limited number of partners and investors, but we want to manage the higher wallet share. And the main thing is we want to grow along with them. Yeah. So that is what. Yeah. So it is not that a client gaya. That is not what our approach is.
Correct. So I think if there are no more questions, then we'll kind of conclude the session. I would like to take this opportunity to thank Nishit for taking the time out from his busy schedule and joining the call and answering all the questions so patiently. So thank you so much, Nishit, and thanks everyone.
Thanks a lot, Vikas. Of course, one disclosure, because before going, there's no assurance guarantee of any income. Of course, if I had spoken anything about on religious sentiment, please, there was no intent on any particular thing. Yeah, guys, please do consult your investment advisor before investing into stock markets.
All right. Okay. Thank you.
Thanks a lot, Vikas. Thanks.
Pleasure talking to you.